Welcome to another weekly market update. It's Sunday the 18th of December after the market closed on Friday the 16th of December. Let's look at the really big picture. This is the bull market that started in 2009 and as you can see it wasn't exactly a smooth ride for the overall index here. This is the NYA, then all the stock markets in the New York Stock Exchange, and you can see it's more of a bumpy ride. But if we look at the S&P 500, you can see actually quite a smooth bull market, which did start to level off, even start to go down, and then more recently he's actually making progress and pushing higher here, as I've been commentating on the last few weeks. I think what's been confusing here is there's two charts here. The overall market, as I said, has a bumpy ride in the S&P 500. And so I've been looking at these two charts along the way, trying to figure out what's going on. Short-term trend is undoubtedly upwards. It's just hard to see the bull market a new bull market starting with valuations this high. It just doesn't typically happen, or if it does, it just can't keep up for very long. So that's why I've been, dubious about it, whilst not getting in the way of the trend or even, taking advantage of the short-term trend. So one thing, though, it has been missing, to be fair, before you could call a market top, or this was the end of the bull market, was, there was no this kind of euphoric blow-off top, which typically how things end. When everyone's a bull and the last thing you expect is for things to go south and everything seems fine, that's usually when the bear shows up. And that's the one thing that was missing. That psychological element wasn't there over the last year. In fact, a lot of people didn't trust this bull market. So maybe what we need and what is happening right now is that final kind of euphoric blow off top that the bear finally needs to put this to rest. So we will see. The January hangover could be a nasty one. Let's look at this is a 3-year chart. You can see there's no question about that. That's very stepping upwards bullish action like that. As I did say last week, it's very extended now, way off of its. This is the 40-week rising moving average there, and like I said, I said last week actually it would either going to level off or it would correct in a healthy way, hopefully. And what it actually did was chose to level off, as you can see, from 1 week to the next. That price is pretty much exactly the same. So it's kind of refueling, and you see that here in their day-to-day chart. One thing that was a little Friday's action, it did sort of sell off towards the end, and you can see on this rised volume bar here on increased volume. So there was definitely a bit of profit taking there. If it leads to something else this week, we'll see. Although this is typically one of the bullish, the next 2 weeks are typically, you can't guarantee it, but typically one of the the most bullish couple of weeks of the year. They're just the spirit around Christmas. It's just as simple as that. So if it comes back and if it can sort of hold around here, 22.40, that'll actually be a healthy pullback, or even 22.20. It'd have to be lower than this level here for me to start thinking that the things really could start getting a lot worse for the market. But definitely some selling going on. So for now, the trend is, you can see right here, the trend is definitely upwards. There's that strong upwards trend, no question about it. I'm not going to get in the way of that, and I'm going to let some winning trades ride, as my members know about. Definitely still, the market sort of calling off a little bit, and should see some just sideways action at least from here. So speak to you next week.